But the media wants to keep lying to you and telling you just how great it is that we've won the war on inflation. All right, inflation continues to rise, rising faster than expected in January, and that is leaving high prices to persist. Now, the core number, I think it was like 3.1% versus 2.9% was the expectation. But in all reality, right, we're not just dealing with 3.1%. It's 3.1% on top of all the cumulative changes over time. Think about it this way, right? You put your money in the bank, and 1 year you're making 3%, which is great. All right, cool. 1 year you're making 5%. 1 year you're making 9%. 1 year you're making 4%. 1 year you're making 3%. So you've got this huge hump, right? You've got this huge hump, and you're thinking, changes, right? There's been some changes here. And over that entire time, it didn't just go up by the 3 or 4%. No, it actually had some peaks and valleys, and cumulatively, it's expanded exponentially to your account. Now, the same thing has happened with inflation, but on this hand, it's not so good, right? On this hand, it's not a great thing to have, but the media wants to keep lying to you and telling you just how great it is that we've won the war on inflation. In fact, I saw this video, and I'm going to play the clip of it here, where Bill Maher actually talks with guest Jillian Michaels from Biggest Loser. Like, who cares? But apparently, Jillian Michaels actually is pretty based. Jillian Michaels is actually spitting a lot of truth here. And Bill Maher, he doesn't even know how to handle it.
We won the pandemic economically. I mean, America...
Did? God, I don't feel that way. Explain it to me. I feel like inflation's insane.
Numbers.
Everything.
Inflation is not insane.
Bill, go buy a car.
There's numbers. I understand things,
a house
but it has
tripled here.
Look, I get that people
buy some eggs.
I mean, dude can't even comprehend how to respond to Jillian Michaels. He's just laughing it off. He's like, numbers are telling us that we've won the war on inflation. Dude, seriously, as Jillian Michaels was just saying, go buy a car, go buy a house, go buy some eggs. And if you weren't sitting in a $20 million mansion, maybe you would see the difference. And I think that was actually pretty cool. I have a newfound respect for Jillian Michaels that I was not expecting to have. But let's take a look at this, right? Inflation rose more than expected in January, thanks to a jump in grocery and housing costs, underscoring the challenges of taming price pressures within the economy. The Labor Department said Tuesday that the CPI, a broad measure of the price of everyday goods, including gasoline, rose 0.3% in January from the previous month, and that prices climbed 3.1% from the same time last year. Both of those figures came in higher than the expectation forecast, right? So 0.2 and 2.9 versus 0.3 and 3.1. And this is what I'm talking about here, right? I don't know if it's in here. It's on the tweet that we're going to discuss here in a minute, right? How cumulative inflation is up like 20+% in some things. But this is what I'm talking about, right? Yes, period over period, it's not that great of a change. Cumulatively, it's enormous, right? Cumulatively, we're talking 20+% increase on everything. And 20+% actually feels pretty small, right? I'll never forget the day I went to Walmart, right? I didn't go to a fancy Whole Foods. I didn't go to Market Street. I went to Walmart to get milk and cereal for my kids. I got a bag of Fruit Loops and 2 jugs of Fairlife milk, and it was $17. Milk, cereal, $17. I was like, what is happening, right? And I'm not the only one who's seeing this, right? This giant spike in inflation continues to rule over everybody, right? Inflation has been slow to retreat. Core prices, which exclude the more volatile instruments like food and energy, climbed 0.4%. And it rose 3.9% annually. Both of those figures are higher than estimates. The report indicates that while inflation has fallen considerably from the 9.1% peak, it's still well above the 2% target. Now, here is some information. I don't have the data in front of me. It's anecdotal, but I'm very excited about. So first is home prices are down 18% from their peak during 2022, I believe is when it peaked. So home prices are down 18%. Auto prices are continuing to go down. I believe the last figure I saw was down 4.1% month over month. Now, while that doesn't sound like a lot, this is exactly what we need to see. This is what the point of raising rates was to see by raising rates, people are not able to afford as high of a cost on those type of assets, specifically homes and autos, which are the two that generally require financing for pretty much everybody out there. So if the cost of finance has gone up so much and the cost of the asset's gone up so much, the only way for anybody to buy the asset who used to be able to when rates were lower is for the price of the asset to come down. And we're actually starting to see that, which if you're a homeowner or if you are if you bought one of the cars during COVID when you paid that huge dealer markup, yeah, you're going to be upside down on some of these things, right? But overall, the economy needs prices to cool off. That was the whole point of raising rates. And then McDonald's, I thought this was the most incredible thing that I had seen. We covered this story last week. McDonald's, in some places, they were charging $18 for a Big Mac combo. And like that's straight garbage food. Why would you even buy that? But $18 for a Big Mac combo. I can go to a decent restaurant and have a real meal and have a waitress or waiter or a server, I should say, bring me the food without having to lift a finger and have my drinks refilled and everything else for $18 or less. Like nobody needs to be paying $18 for McDonald's. But the point with that is that they missed their sales target bigly, as Trump would say. They missed their sales target bigly. They had like a 4.7% projected growth in sales, and they came in at like a 3-point-something% decline. That's a giant spread between the two. And consider that they increased prices during this time, right? So they increased prices, yet they still couldn't tap into the growth that they wanted, which means that their unit sales tanked. Their unit sales, the number of sales that McDonald's made, tanked. And that is exactly what we want to see. So I actually have some hope in the economy that we might start seeing the disinflation, the deflation that we actually want to see. The problem that people in the know, right, the people who are in charge, especially during election year, the problem, and people like Bill Maher who have completely lost touch with reality, is that inflation happens so fast that we remember how much things used to cost, right? We're only talking 3-4 years ago. And then 3-4 years, it feels like everything's doubled or tripled. Everything across the board. And then you've got people like him saying, we've won the battle of inflation. It didn't even hurt us, right? That's not true. It hurt a lot. And now companies are finally starting to lower their prices, which is exactly what we want to see. We had a stat earlier that we covered on one of these episodes earlier, a while ago, where the inflation had gone up and money supply had gone down. Money supply meaning what's on deposit in institutions. Money supply had gone down, yet prices had not started to come down. And that was the first time ever that we had actually seen that stat. So I'm glad to see that prices are starting to come down. So here's my prediction, right? This is Chris's prediction. I had this conversation with some people the other day. I think we're in for short-term pain. Short-term pain meaning that prices are about to fall off a cliff. Right. I think the consumer who has maxed out all their credit cards, I think the consumer who has withdrawn all excess savings since COVID, I think the consumer is finally about to have the power that they want and say, we're going to stop buying. And you as companies are going to have to start lowering prices back to what we expect them to be. Now, what we could see is a deflationary death spiral where, let's say, for example, I need to sell my house at $500,000 to make any sort of profit, but I can't find a buyer at 500, so I lower it to 400, and then nobody's buying it at 400, so I need to lower it again to 300, and even at that point, people are still not even interested in buying the house, so I got to lower it to 250. That's a giant death spiral. Now, that could happen across the real estate market, auto market, retail, anything you can think of. We could see a spiral like that, which on one hand is great, but on the other hand, it could be problematic. Now, I'm not thinking that it will be problematic. I think once we hit a point where prices are at a affordable level, the economy will start to pick up on its own. And I also think Jerome Powell will cut rates aggressively. When the deflationary spiral starts, I think he will aggressively cut rates because that's what he does. Jerome Powell's either all the way on the gas or all the way on the brake. So I think we're going to have 2024 could be a contentious year while inflation tops and then starts to come down and we start to see deflation. But I think 2025, in fact, I would put my money on recessionary environment through the first half of 2025, the next 18 months or so. Once we've achieved, just go back to 2008, right? When prices crashed on everything, right? And while it hurts during that time, once you reach a final floor, it's a very prosperous time for a lot of people. So that's Chris's prediction here. About 18 months of recessionary speaking, real deflation that's going to be coming up. And then once we hit that floor, probably midway through 2025, an incredible decade ahead of us for the United States economy. That's just my opinion. I could be 100% wrong, but at least that's the tea leaves that I'm reading. So let's take a look at what the AI trading data has to say about the economy, right? We actually got a sell signal on the Qs, on the NASDAQ, QQQ today. Happy Valentine's Day. It's time to sell your stock. And in fact, the QQQ, the NASDAQ, has been on an incredible run recently, showing a signal return of 124.75%. So if you want to get your hands on these incredible returns just like this, be sure to head over to outlierdeal.com. That's OVTLYR deal.com. So you can see these buy and sell signals that we show every single day over on Outlier. So let's take a look at what the internet's saying about this, right? While CPI is at 3.1%, which doesn't seem like much, cumulative inflation is so much higher, right? Let's see. Car insurance, 20%. Boy, my car insurance is coming up in about 60 days. I'm not looking forward to that. Transportation, 9%. Hospital, 6%. Car repair inflation, 6%. Homeowner inflation, 6%. Rent inflation, let me turn that off. Rent inflation, 6%. Food away from home, 5%. Both core CPI and headline CPI came in hotter than expectations. It's the second straight month with both readings being higher than expected. Markets have priced out 2 interest rate cuts in 2024 over the last 6 weeks. Affordability is still getting worse. This is part of my thesis here, right? We're going to start seeing rates be so high, companies cut back, companies cut prices, and then it's going to be a very quick deflationary measure, and then rates will be slammed back to the floor. That's my prediction here. Let's see what people say on the internet here. These price increases are all happening despite energy prices being more or less contained for the moment. What happens if energy prices start to rise because of inflation, geopolitical issues, or other supply and demand dynamics? I don't know. Not Larry Fink says inflation is up 19.2% compared to pre-pandemic levels. Wages are not up more than 10%. The Fed printing trillions at 0% interest only serve the top 1%. Jim Cramer saying the quiet part out loud. Shelter prices are going up because of the large inflow of illegal immigrants. I'm not even going to go down that path. I don't know where you get your numbers from, but they do not represent where I live. Homeowners insurance is up 40%. Electricity up 40%. Food prices are 100% higher than a year or two ago. My grocery bill is up between 60 to 80%. Don't look at reports, just go and buy something. Yeah, inflation is not gone yet. And while I know that this is temporary, we're going to see some bearishness in the economy. And then I think we're going to see all sunshine and rainbows. But we got a big storm to get through before we get to that point. And what else is not even close is the fact that I have no idea how the YouTube algorithm works, but it tells me that you're going to love one of these 2 videos. So be sure to click those to watch more, and I'll see you on the next episode.